I don't care how big you are. I don't care if you're brand new. That if you have any non-accredited investors, you must give them offering documents. It's not a question of you should. It's a question that you must. And the thing is that a lot of folks get bad advice from different, non-specialist attorneys or friends and online gurus. They do stuff. What happens is that the state regulator comes knocking on their door, like, oh crap. Now I got to spend, 30, 50, 80, $100,000 to defend this case when you could have just done a free phone consultation with me and done right. I never advocate debt fund to be the very first step in someone's life cycle as a private lender. Raising capital is not easy. It's very complicated, very challenging. You should learn how to write a loan first, get some deals done, figure out what kind of business you want to build. And if balance sheet lending is in your future, then build the fund.
Hello. Today we are going to learn from Kevin Kim. Welcome to the Masters of Real Estate. Kevin has helped over 1,000 managers launch their funds and is a partner in the largest law firm in private lending. So, Kevin, welcome. How's it going, buddy?
I'm doing well. Thank you for having me on the show. Yeah, appreciate the opportunity.
Absolutely, Kevin. So, Kevin, how do you introduce yourself to your target audience?
So my name's Kevin. I'm a partner here at Geraci LLP. We're the largest law firm that focuses exclusively in the industry of private lending. We also do a little bit of work outside of private lending in real estate and other securities work, but the vast majority of our clientele are up and down the food chain in the, you can call it private lending, you can call it hard money lending, you can call it RTL, BPL, basically real estate investment finance in both residential and in commercial real estate. So we have clients all over the country. I specialize primarily in the fund formation / securities transactions world. So I lead the firm's corporate and securities division. I've been doing it now 15 years. And, it's a ever dynamic space. And so we're always working with new sponsors, new ideas, and helping the industry grow on the balance sheet side with our clients who want to become direct lenders. So that's our primary area. The other kind of focus that we have here as a firm that's dedicated to private lending, we have a lot of corporate and securities expertise, but also a lot of licensing expertise when it comes to private lending in the U.S. So we help clients understand the licensing obligations and also apply for licenses on their behalf throughout the various states that require ones. That's another part of my practice. And then the firm as a whole, we're designed to serve a private lender's business from top to bottom, right? So we have transactional support. Our banking and finance team, they close loans, draft all the transactional documents you might need to be a lender. They also do a lot of closings for clients and do compliance for clients. We do the corporate and security stuff. We do the formation of the entities, governance of the entities, securities offerings, the investment opportunities, the licensing. We also have like foreclosure and bankruptcy and litigation. That's primarily here in California. So the goal is to be able to, if the client is a private lender, we're trying to be able to serve the business from top to bottom. And that goes beyond their legal needs in the form of our conferences and our podcast, in the form of education and networking opportunities and things like that. So we're trying to serve the industry at large and help grow it. And I think we've done a pretty good job over the past 15 years.
If you are a private lender and you
Mm-hmm.
are raising your first fund or your next fund and you want to work
Mm-hmm.
with somebody who is basically essentially top tier in the industry, somebody who has launched over a
Mm-hmm.
thousand funds, whether in direct private lending or transit like RTLs, which are short-term loans, or BPLs, which I want to learn more about, or anything else, they should reach out to you, Kevin Kim. Is that the right summary?
I think so. Yeah, I mean, we talk with a lot of new lenders too, especially lately. A lot of new lenders have been reaching out. They can be small, local guys who just do a handful of deals. They want to do it right. Um, or we work with the national shops too, right? So we take on all comers, and yeah, I mean, I feel like we have the best resources in the country when it comes to education and compliance. So yeah,
How did you get to where you are today? Like, can you name a couple of inflection points in your life or describe them that led you to today?
it's funny because it goes actually before my legal career, right? So after college, I was your average, liberal arts degree, didn't know what to do with life, and my dad, he was a banker. He worked at a Korean bank for 30, 40 years. His dad before him was also a banker in Korea, and so he recommended, hey, if you don't know what you want to do, you might want to try working at a bank, learn about how loans work, how deposits work, and it was a good idea. I don't regret it at all. It was probably one of the best decisions I've ever made because I realized, hey, I learned about basically underwriting, right? I was a loan officer, so I learned about underwriting. I learned about the importance of networking and client management, um, and also how the banking world works. And then I went to law school, and I found myself excelling in those types of classes, right? Real estate law, real estate finance specifically, and also corporate law and securities law. So I had it in my mind when I graduated law school that I wanted to go into the field of securities law. Well, the problem was I graduated law school in 2009, so pretty bad time, right? So I worked at small firms in the LA area, just kind of making ends meet, and I found the opportunity to work here in 2014 and started as a contract attorney. But I was like, you know what? It's a step back in my career initially because I was already doing different things that weren't contract attorney. I was I had my own office for a little while, and but I realized, wait a minute, no, this is the opportunity that I want. This is a firm that does real estate finance. They work with non-bank lenders. It's a very creative industry, and I had known all about it since I was at the bank, and then also it's securities work. Well, what more could I ask for? And it was actually my mom and my then girlfriend, now wife, who said, "Hey, your ego is talking. Shut up. Take the opportunity. It's what you've been wanting. It just happens to pay a little bit less, and go for it." And they were, I mean, that was the best advice I ever got in my life, right? Because now, 10 years later, here I am, um, running the department, and also owning the firm, part of the firm. And so that's led to my career being developed and growing and becoming a much better professional lawyer and also just business owner too. So it helps. It helped a lot. And so that was the biggest thing was like, putting my ego down and having my wife and my mom both tell me, "You're crazy for thinking that way. That's a great opportunity. You should give it a shot." And the firm was tiny back then, right? We were less than 10 people. Now we're at 100 employees, 40 attorneys, nationwide practice. And I was part of that journey and growing the law firm to that level. And I think it was probably the most important decision I made in my life.
Wow, wow. So seems like a lot of the inflection points in your life were shaped by your respect for your closest loved ones, from it being inspired by
Hmm.
your father and grandfather to get into banking and finance, and listening very closely to your life partner then, and like even today, of getting into the right firm. But let's double click on that. Like you
Yeah.
said, when you joined, there were 10 employees. Now there are 40 attorneys and 100 employees, and you're a partner in the firm. You're also an attorney. You're also an instructor, a formal instructor. You're also a podcast host. You run your own podcast.
Yeah.
So you know most important question is like, why do you do so many things?
Yeah.
What's your mindset? And what's your mindset?
Well, a lot of that were accidental products, right? So let's go backwards, right? The podcast was literally just like we had always done video education with webinars and stuff like that, and it was kind of accidental. What happened was before COVID took up happened, we had gotten wind that Steve Pollock, the founder, Dr. Steve Pollock, the founder of Anchor Loans, was going to retire, and so we wanted to get an interview on the books with him at one of our conferences. So we did that, and we had that, kind of just in on the shelves, and we were trying to figure out what to do with it because it was a long interview. Well, COVID hit, and then we were all, locked down. And I was talking to my marketing team. They're like, "Well, we can't go to conferences. We can't go. We have to connect with our clients in a different way. Let's use this interview as the first interview and create a podcast." And I was like, "Okay, I don't know about that. I've never tried that before, but I've done a lot of panels, and I basically interviewed my panelists, right? So, well, okay, let's do that." And so it started out with just me interviewing my direct clients who I respected as the first season, and little did we know this thing actually started taking off, and now we're getting ready for season 5, and it's what we realized was the industry is really hungry to learn, not necessarily about like the rules and the ins and outs of the legal. They want to know like how did those guys build their private lending business and what did they overcome and what challenges did they face so they can learn from that kind of business experience. And we found that value relatively early on, and so we just kept going with it. And ultimately we found that it's a really good marketing tool for the law firm, right? It just shows our expertise, it shows our network, it shows our abilities. And so we kept doing it after season 1, and here we are. That same thing goes for all the other stuff that we do here at the firms. We're very busy in the world of not legal, right? We do conferences and we do not legal things, but I think it's because like unlike other law firms that have 20 different practice groups, right, and they serve 20 different industries too. We really only serve people who are in this relatively niche industry of the mortgage market, and then we've got a handful of real estate GPs, right? And so in doing so, we really have to double down on the B2B marketing. And so content marketing is a really big thing for us. And we realized that very early on, and hence why we do so much content and why we do the conferences and all that other stuff, because it's the best way to create value but also market the law firm. So, and
I
sure,
couldn't.
yeah, it's a lot of work, but that's just part of the business, right? That's how we see it. So
So you absolutely agreed on the benefits of running a podcast and why it's so valuable to you personally and Geraci as well, your law firm. The core question is a lot of people try a lot of things, but most of
mm,
them don't go from zero to 1,000 clients in 10 years, don't go from zero to 4 seasons of podcast, don't go from being a formal instructor. What is your mindset when pursuing these things? Like, how do you tackle with the highs and the lows of pursuing these, relatively obvious but still difficult to execute opportunities?
I mean, it's not really like it's not, there's no opportunistic mindset. There's no like, oh, this is a great idea, we should create this program. A lot of it's been, hey, can we add value to our clients in any unique ways? And there have been some experiments that have not that have failed, right? We've had other ventures that haven't done so well. And so, for example, the conferences, right? The conferences, we used to do a lot more conferences, and we realized causing too much, this is causing conference fatigue, and so let's pare it back a little bit, um, and our marketing team is very, very smart about, being very, I would call it strategic about where we put our resources and what really does move the needle. And so are we, right? And the ultimate mindset is, well, is what we're doing adding value to the people that are listening and participating, right? The example, the classes, right? The classes, that was Anthony Geraci's brainchild when he founded AAPL. Was, he thought that education through classes were a good idea through a certification. And when I took over the department, I became the instructor for it. And it's kind of been has its ups and downs over the years, right? Sometimes it's very well attended, sometimes not very well attended. But ultimately, we found that not only does it provide value to our clients in education about learning about funds, but we get a lot of value out of it because obviously clients sign up with us after seeing us and learning from us. So we expanded it, right? We said, well, let's expand it, right? Even though it's not getting as much attention as we wanted to, let's continue to expand it because we know that people who are participating are getting value out of it. And now it's online and it's done live and it's a lot more actively engaged with. So
That makes a lot of sense. So seems like your core reason behind like trying new things and experimenting and scaling them is client obsession. Like what will add the most value to my clients, and that's your driving factor. Is that the right summary?
yeah, I mean, we're not going to do it if we think it's only going to add value to us, right? Like if we think we're gonna, if that would be more opportunistic, right? It's more like, hey, we're the only ones that's gonna benefit from this, right? So we want to make sure that what we're doing extends some kind of value to the other part, the receiving side, right? Otherwise, what's the point, right? It's just one sided, right? So um, and then the end result of that, I can call it generous idea or client first mentality, is that we benefit by getting clients, right? So
I love it. On the client first mentality notion, like what kind of spirit animal best describes you and Geraci?
spirit animal's tough. I'm not very familiar with how like I'm not much of an animal
Go
person,
ahead.
but
Yeah,
we've had this joke about, like, we've had a lot of clients tell us, like, hey, you guys are kind of the law firm for every man, right? And that's, we really don't, like, a lot of law firms say, oh yeah, you're too small for us, or like, we don't really, we work with lenders of all, like, clients of all sizes. I work with clients that was just one guy had an idea, had some money, wanted to wanted to set it up, and now he's managing a $200 million fund with 50 employees, right? So, like, these things happen, and we don't want to discriminate, because we know that it's possible, anything's possible for our clients, as long as we're there to back them. So we try to be as supportive as we can. We don't really discriminate based off of, like, oh, like, you're too small for this firm. We don't believe that here, right? Because we wouldn't have gotten where we are today if we didn't support all the folks that came our way that needed help. So, um, yeah, we're much more kind of open to the, I guess, to call it the masses, and I feel like that's been our one of our core philosophies, is like, we really aren't interested in saying, oh, we're only going to work with the, you know top 20 lenders in the country. Why? It doesn't make any sense.
I love it. So it seems like your spirit is more in terms of helping private lending across every cycle. So let's go deeper
Yeah.
on that. So for somebody who's never heard of private lending before, but is
Mm.
just fascinated with the idea of launching a fund and being that person who goes from one person with an idea to managing $200 million someday, what should they understand about private lending?
Well, I mean, private lending is definitely a very unique part of the mortgage market, right? So if you don't have any real estate experience whatsoever, I don't necessarily know if you just jump in and do this. You probably should look at it as an investment to start, maybe invest with it. But to explain what it is, it's no longer, it used to have this weird, I wouldn't call it stereotype of being like loan sharking, but it's really not. It's a creation of, it's a reaction in the market, right? Of the fact that banks and financial institutions are no longer able to be reliably providing credit to real estate investors, both commercial and residential, and they can't provide any kind of short-term financing for, real for people who are trying to, I don't know, build properties and sell them, aka fix and flip, right? Or residential transitional lending, or buy rental properties, or do value add on multifamily, or construction loans. These are no longer things that banks could do after the recession. So in come the private sector and now the institutions, and it's really a see a need, fill a need type of business. It revolves around the idea of providing short term, typically 1 year, maybe 2 year loans, right, at a fixed interest rate to a real estate investor, right? And the goal is to either get out of the loan within 12 months to 24 months, or move them over to a rental loan and sell that off to an institution. And it's a higher rate of return, but it's not like, a lot of people think, oh, you guys are charging like, 20% interest. We're not, right? The average interest rate across the country is more along the lines of 12%. And that, some people might think that's high, but if you think about it, it's only a short-term transaction. So it's not as scary, right? And frankly, a lot of times it's there's prepaid interest, there's a balloon. So it's a very, very dynamic industry, because it fills a massive need in the real estate market too. So it's a very good, I feel like, good support system for the larger real estate market as a whole. Um, in general, if you're never been exposed to it, I would encourage folks to start as an investor. Fund a few loans. You need to learn about how those loans work. Start listening to some of our content. There's a lot of other good content out there. A lot of good content for, like, brand new lenders. I think Beth Johnson over at Lend to Live team, they do a lot of new lender education, and learn from what's out there, and start out as an investor and just fund some loans, and then you can figure out whether I want to make a business out of this, A lot of folks come from the mortgage market, the conventional mortgage market, or the non-QM mortgage market. That's a little bit different, right? That's not the same story where they have mortgage experience, they know underwriting. Now they have to learn a new trade within the universe that they're in, and so they just have to learn the new rules and learn and build new muscles. And that's an easier transition for those folks. I always tell them, start brokering some deals, and then that'll get you started. And there's plenty of capital out there to fund your deals. And then eventually you can start figuring out, well, maybe a fund is in my future, or an institutional partnership is my future. But to comment on the fund issue, like I never advocate debt fund to be the very first step in someone's life cycle as a private lender, because it's raising capital is not easy. It's very complicated, very challenging. And so you shouldn't just jump headfirst into a debt fund until you've got like the core. Like if you don't know how to write a loan, you should learn how to write a loan first, get some deals done, figure out what kind of business you want to build, and if balance sheet lending is in your future, then build the fund, right? Because sometimes the fund's not a good fit, right? And sometimes it's too early. I have a lot of people that call me about, hey, it's your class on fund management. I want to do a fund. And many times I'll tell them, I honestly think it's too early. You haven't even funded a loan yet. Like get some loans done, figure out what you want your business to look like, look at all the different blueprints out there. And if being a balance sheet lender is the blueprint that you want to pursue, then the fund is the appropriate next step.
Makes a lot of sense, Kevin. So let's say the listener, listens to your advice, funds a few loans, invests in a few brokers, a few loans from them, and now they're finally ready to launch a private lending fund and reach out to
Yeah.
you. So, what
Yeah.
are a couple of things that listeners don't really understand about launching a private equity fund, but they should understand?
Well, first of all, it's not a hobby, right? There's a lot of gurus out there that make it seem like, oh yeah, it's a wealth building strategy. It's not, right? I mean, yeah, you'll make money, sure, right? You'll make good money off of running a fund, but it's definitely not some kind of side hustle, right? It's raising money isn't easy, right? You're asking somebody to invest in a untested, unverified new fund. It's a very challenging exercise. And so I don't necessarily advocate for funds for people who are thinking of it like that. It has to be a right fit for your business. So we got to evaluate that. A lot of times people already know that and they call us, right? But a lot of times they just call us because they're interested in it, and we kind of evaluate their business. The other thing is, one of the commonly overlooked things with funds is that they're also very expensive to manage, right? So it's not like, while we are a very affordable service, like you're building something that's supposed to be an ongoing fund, and it's going to cost money. You can't do this on the cheap. Well, correct me. I'm correct myself. You can do it on the cheap. There are ways to do it on the cheap, but it's not going to be done correctly, and you create a lot of risk for yourself. And I've had to defend and unwind and fix a lot of these problems over the years, and so it's better to do it right the first time. And it'll cost a little bit more than you might be comfortable with, but it's an investment. And then probably the third thing that's commonly overlooked is, you know, I would say the compliance. Or like, a lot of folks come to me and say, "Oh yeah, we're raising money from family and friends. We don't need to talk to a securities attorney." And I'm like, you couldn't be farther from the truth. Like in my classes, I always say, cousin Bob becomes plaintiff Bob in a heartbeat, right? And just because they're your family and friends doesn't mean that you can just raise money willy nilly without complying with the law. And so, it's very important to think about, right? Even a friends and family raise warrants securities compliance and doing it correctly, because you could be in serious violation of anti-fraud rules, and you don't want regulators breathing down your throat, right? It's just not fun. And the state regulators especially, they don't discriminate on how big you are, right? They will go after the small guy. The SEC tends not to. It's not really worth their time, but they have in the past as well when they want to make an example out of somebody. But very rarely, they don't have the resources to. The states do, and they have the ability to go after a small guy. So I don't encourage folks to overlook that. Hey, friends and family doesn't count, and it definitely does. And if you want to raise money generally, you should speak to a securities attorney.
Makes sense. And let's say they reach out to you for guidance on securities law.
Mm-hmm.
So, what are the top like two, three things they should know about launching, being compliant with securities law when they're launching a private lending fund?
Yeah. I mean, the number one thing we always get, and I always have to defeat, is just because it's a loan doesn't mean it's not a security, right? A lot of folks, oh yeah, we just set up these loans, right? And we're borrowing money from people, and yeah, that's not a security. Or we're doing participation interest, or we're doing co-lending. It's not a security. I'm like, you couldn't be further from the truth. It has no bearing on it, right? Like people always say, oh, a loan's not a security. Well, no. What do you think a bond is? Like a bond, you're just lending money to the government, right? Those are definitely securities. So what makes your loan not a security? So we have a lot of folks that kind of just presume that what they're doing is they're not selling securities when they actually are. And so it's not worth the risk, because the risk means you do it not you don't you, if you don't do it right, you don't have offering documents and you don't follow the exemptions, well, then the regulators come knocking at your door, and they'll probably let you go with a slap on the wrist. But to get through that and get to the slap on the wrist, it's a very painful process you have to pay an attorney like me for. So let's not do that, right? Let's avoid that and have everything done right. Um, one of the other things that are commonly overlooked is, oh yeah, I don't need offering documents. I don't need offering documents. I hear a lot of that. I'm like, no, you do, right? Number one, it's best practice regardless, right? It's any serious any serious person raising money, they have offering documents prepared, right? And the other thing is, oh, I'm raising money from family and friends. If anything, actually, that warrants it even more, because it's more likely that you have non-accredited investors, and the law is very explicit that if you have any non-accredited investors, you must give them offering documents. It's not a question of you should. It's a question that you must. And so these are overlooked fact patterns. And the thing is that a lot of folks, get bad advice from different, non-specialist attorneys or friends and online gurus. They do stuff, and what happens is that the state regulator comes knocking on their door and like, oh crap, now I got to spend, 30, 50, 80, $100,000 to defend this case, when you could have just done a free phone consultation with me and done it right. And that's one of the things that we find, not just me, but we found that a lot. And that's one of the unfortunate situations that we found over the years. And so, it's worth setting up an appointment for a free consultation. You know what I mean? I'm not going to bill you for a 30-minute consult.
And for somebody listening to this, let's say they want to set up an appointment with you to do a free consultation, how should they reach out to you, Kevin?
This is our website, GeraciLawFirm.com. Pretty easy, right? Or you can email me. It's k.kim@GeraciLLP.com. I'm all over the internet. You can find me pretty easily. And I don't charge for consults. Small. I don't care how big you are. I don't care if you're brand new. I talk to all comers. The only people I don't talk to is if I can't help you with your inquiry, then I'll tell you I can't help you, right? So, you know, we're
I love.
pretty open book about that kind of stuff.
So now let's say the individual you're helping raises a friends and family fund, treats the loans they're originating as a security, compliance with
Mm-hmm.
security laws, creates proper offering documents with you, and now they're off to the races. Now they really want to scale up and go from 1 to 100.
Mm-hmm. Yeah.
You've seen 1,000 fund manage. You've helped launch over 1,000 funds. What are the most interesting or creative or surprising fundraising strategies you've seen used by fund managers or sponsors?
Yeah. I mean, this is not as, it's not as exciting. I mean, honestly, it's the guys that do the hard work and make the tough choices early that actually have long-term success, right? So it's the guys that do it right from the beginning, right? They audited financials, they've got really well-aligned structures, right? They have experience raising capital, and they've got a good track record on the origination side, right? Because you can raise all the money in the world, but you can't fill that fund with loans, you're stuck, right? So those are all key factors of clients who've made it, and it very rarely does it happen overnight. There are only a handful of clients that have been able to fill their funds quickly, and that's really just because they come from a very robust capital raising background. Most clients, it takes time, and I don't expect them to fill their fund overnight. It's a lot of work. But the clients early on that choose to make the tough choices and what investors want to see, and yeah, it sucks for them now, but in the long term it pays off. And that's that's what I think is a good formula for success in the future in raising capital and filling your fund. But also, like, you have to have a track record, right? No one's going to trust someone that has, you know, has no ability to originate, right? No originate loans. So you really need to have both boxes checked. Aside from that, a lot of it boils down to, I would call it diligence, right? People who don't give up, right? A lot of our clients, they get burned out. It's like raising capital is no different than sales. You're gonna kiss a lot of frogs. You're gonna hear no a lot. It's gonna be a grind, and you have to be ready for that, right? Um, but yeah, I mean, other than that, I mean, there's no magic pill or, like really kind of crazy story. The only crazy story that we have is we have a client that kind of, came from a very robust capital raising background, and so he was able to fill his fund very quickly. He still holds the record, and but he's a kind of a unicorn, right? He's a very unique person, unlike most, and so that was great for him. But otherwise, no.
Yeah, I love it. So do good by investors, have a real track record, treat it like a real sales process, and most importantly, don't get swayed by these unicorns, right? Everybody else takes time raising funds. Like there is all.
Yeah, and
Yeah,
don't get discouraged either, right? Oh, that guy did that, and that guy. Like, well, hold on, like you're overlooking the fact that, like, a lot of clients, like, oh, how do I get to become like that fund? Well, that fund's been around for 10 years. you know, they've
yeah,
originated 5 billion in loans. They didn't just get there overnight.
yeah,
So
I love it. So now looking forward in the future, like now that you spent so much time in the space of helping fund managers raise private funds, what are the problems that you would like to see solved in this space that haven't been solved properly yet?
that's tough. There's a lot of problems, right? So, one of the things that we're very, like, nervous about is regulatory action. Always, right? We're very nervous about both the federal SEC making up rules that are completely new and detrimental, right? And we saw that, as recently as a couple of years ago with when they tried to kind of kill Reg D, via these, Build Back Better program, right? And under the Biden administration, we saw regulatory threats to the status quo, and without thinking about expanding the opportunities for private capital. And this current administration is a lot more hawkish, right? And you see them doing that in crypto, right? And so I get very nervous about that. Same thing with mortgage licensing. Private lending is the goal in private lending is to minimize what I would call unwanted attention from state regulators, right? And there are a handful of states that have tried to institute licensing obligations on private lenders. Florida is one of them, right? And so we're always cognizant of these issues. We're always wanting to fight these issues, but sometimes they pop out of nowhere, right? New York with their taxes, and Los Angeles with their mansion tax. And so, like, those are the concerns that I have, because it's regulations that can really disrupt our space. Because right now we're on the lending side, especially, we're pretty unregulated, right? It's a very lax environment because it's commercial in nature. And on the private security side too, it's relatively, you know, easy to navigate, compared to the public offerings. But, you know, I don't think that we're headed in that direction right now. But who knows, right?
Hmm. That makes sense. So this is a relatively new thought, something we haven't discussed before, Kevin. But recently the Supreme Court struck down the Chevron
Yeah,
doctrine, which
yeah.
was overruling a 1984 decision between Chevron and the Natural Resources Defense Council. And in a
Hmm.
6-3 decision, the Supreme Court essentially has heavily curtailed the power of federal agencies in regulating entities. What do you
Hmm.
foresee as like the short-term and long-term implications of this on the private lending and the securities industry?
Yeah, and security is a lot. I mean, security is the way it works. Really, is the SEC is kind of your first regulator, right? And they're an executive branch. But the difference between them and the EPA is a little bit more specificity to their there's a little more congressional authorization to their rulemaking authority. So I'm not as, I would say, optimistic that now, you know the SEC rulemaking is now going to be undercut completely. I do expect there to be some institutional challenges to the rulemaking exercises and trying to use this Chevron case against them. I'm not optimistic yet, but we'll see. I mean, it's hard to tell, right? On the private lending side, on the mortgage side, we deal mostly with state regulators because mortgage regulations are state driven. There is one federal regulator that is an executive branch, one of the newly formed ones, the CFPB. They are the regulator that institutes HMDA and TRID, and they are the regulator that has a lot of regulatory authority over consumer mortgage lenders. Not too much over our industry on private lending, but they've made some attempts to, like for example with HMDA, and I think that will definitely benefit the non-QM and the conventional industry because there will be challenges to their authority under Chevron. But I just don't see it being that meaningful for us on private lending. The states are unaffected by this, right? The states can still do what they want,
Hmm.
and so
Like you mentioned
Chevron doesn't.
before, the real threat, regulatory threat, or compliance threat, or reconciliation threat comes from state regulations more than
For,
anything.
for mortgage and real estate, most of that is state level, right? So, for example, here in California, in LA County and in the city of Los Angeles, they institute the mansion tax, right? The $5 million and up, that's a really big deal, right? And there, SB 1079 in California on foreclosures. These are the things that we really care about and impact our businesses pretty significantly and meaningfully, as opposed to CFPB regulatory action. Those affect the consumer market more than the business purpose market. So we're not overly concerned about federal action. We care about it, right? But more, I think what's more important as opposed to Chevron is like educating Congress to understand that, hey guys, what we're doing is not what you think. They think we're doing, consumer mortgages, right? They think we're doing subprime lending. That's not what we're doing, right? We're adding to the housing. We're allowing more inventory to be built by giving these folks, fixed and flip loans and construction loans and rental loans to add more inventory to the housing market. That's what we're doing. But the problem is that, it's kind of a niche industry, not quite well understood by congressional powers that be. So, that's really as far as it goes for us with the federal government.
I love it. Yeah. All right. Let's go into rapid fire, Kevin, as we go towards the end of this. So, you also mentioned you run a podcast, you've done many successful seasons. What's the most counterintuitive insight you've learned from your guests?
Counterintuitive insight. A lot of accidents lead to like that. You never know you never know which way success might come from, right? A lot of folks started a business doing one thing and accidentally fell into this space
Hmm.
and had success. So I call them blessed accidents, right? And they're amazing stories and there are a lot of them. Anchor loans too, right? So it's a lot of times raw capital. A lot of folks kind of just fell into the industry and are now household names. So
Wow. So, another way of saying that is just never ever quit, right? Like the opposite of winning is
yeah,
not failing, it's quitting. If you don't quit and if you
yeah.
find creative
Don't
way,
quit. Yeah. Yeah.
yeah, you will
But also
eventually.
keep your head on a swivel. Like you never know which way where an opportunity might knock. So
Yeah. I love it. Now, on the other side, like what is the most common mistake you see others making?
well, I mean, I would say the most common mistake that I see with my clients is, aside from breaking the law, right? We've had issues where folks are non-compliant with the law, and that causes problems. Aside from that, from a business standpoint, I think a lot of it is just failure to communicate, right? Whether it be with your investors or your borrowers or your counterparties, it's just failure to communicate. That seems to be the number one failure. It's in today's market, in today's world, it's so easy to communicate. And I think that makes it harder on us. We've got so many ways now, right? Text message, social media, email, voice message, telephone, FaceTime. There's so many ways to communicate now, and failure to communicate seems to be the biggest challenge.
Yeah, completely agree. And yeah, even I have seen the same where like I don't understand why sponsors don't communicate with the investors no matter how the news is because if they give bad news quickly, it's even better, right? Um,
Right, and investors are actually more willing to forgive if you're open and honest about your mistakes.
if your loved ones agree to be mentored by you, what's the most important skill you would teach them?
I have persistence. Just keep going. Right. Keep don't quit. Keep going. Right. And for me, it's just a lack. It's a lack of. For me, it's just a matter of a kind of routine. You just keep moving. You just keep doing what you're doing. Um, but a lot of folks get burned out. A lot of folks, get they get defeated, and just don't give up.
I love it. Don't give
Yeah.
up. Guess that was Kevin Kim, partner at Geraci. If you need help in launching a private lending firm, schedule a free consultation with him by going on GeraciLawFirm.com. If you ever want to talk about real estate, shoot me a note on nick@home.llc. Thanks, everyone.